and welcome to a fresh episode of Legal Wrangle on Indirect Taxation. In this episode, we are presenting before you cases relating to transaction, value actually paid, actually payable and availability of input tax credit on goods sent to job workers but not received back within a period of 90 days. Regarding service tax and customs, we are covering issues relating to challenging order in original via writ appeal after period of more than 6 years, ultimate responsibility of custodian in relation to contents of container and classification of external hard disk along with entitlement for benefit of notification number 6 of 2011 Central Excise and 12 of 2012 Central Excise.
Today we start with a SESTAT decision where the key issue is whether the Central Excise Department can contend that since state government has remitted amount as incentive, sales tax was not paid for the purpose of including it in transaction value when department has assessed sales tax as paid. The assessee in the instant case is Messrs. Welspun Corporation Limited. Now let's go to Shalu for details of the case.
The present assessee was recovering sales tax from their customers on sales effected by them but retained with themselves as an incentive as they were eligible to incentive scheme under Economic Development of Kutch District, Government of Gujarat. Assessee paid the excise duty on said incentive amount under protest, however, subsequently claimed refund of the same. Adjudicating authority rejected the refund claim on the ground that since the said amount was not actually payable, same is liable to be included in assessable value and is liable for duty. However, Commissioner Appeals set aside the order and allowed the appeals filed by assessee.
SESTAT ruled in favor of the assessee, observing that once the Sales Tax Department has assessed sales tax as paid, Central Excise Department cannot contend that since state government has remitted the amount back to the assessee as incentive, sales tax was not paid by them. It is therefore held that condition of Section 4 of the Central Excise Act 1944 stands fulfilled. Consequently, since VAT which was payable was actually paid, the same is required to be excluded from the transaction value.
In our second case, the key issue is whether claim of assessee for input tax credit can be rejected merely on the ground that goods sent to job workers were not received back within a period of 90 days as is stipulated by Rule 20, particularly when such rule is directory and non-mandatory. The assessee in the instant case is Reliance Retail Limited. Now let's go back to Anuj for details.
The assessee, a dealer, was amalgamated with Messrs. Reliance Fresh Limited and it changed its name to Messrs. Reliance Retail Limited. The assessee carried on its business of manufacturing and sale of jewellery. Assessee filed returns for the accounting year 2008-9 in which it claimed input tax credit in respect of gold purchased during that year and adjusted the admissible tax credit against its output tax liability and carried forward the balance tax credit to the next year. The VAT tribunal dismissed the appeal, noting that during the accounting year 2008-9, the assessee claimed ITC on purchase of bullion of the value. However, bullion worth was not received back by assessee from the job workers after it was processed and reconditioned within the period of 90 days stipulated in Rule 20 of the said rules.
The dispute was settled by High Court when it observed that if goods returned by job workers after processing are different from and less in value than goods sent for processing on job work basis, taxable person would in fact be availing ITC of higher value than it was entitled to. It must be held that period of 90 days prescribed in Rule 20 is only directory and not mandatory. Once it is held that the period of 90 days is only directory, the authorities must not consider themselves bound by any rigid time frame or any specific period. In the circumstances, the challenge to Rule 20 insofar as it prescribes the time limit of 90 days is rejected.
It is not every day that we get to hear about issues that have been resolved on a reference made to larger bench. In our next matter, we deal with a reference made to the larger bench of the SESTAT, New Delhi. The matter to be resolved was with regard to the issue of quantum of mandatory deposit to be made in case of second appeal preferred before the tribunal against the Commissioner Appeals' order. Now let's hear the details from Shalu.
The crux of dispute was whether An appellant has to pay 10% mandatory deposit over and above the mandatory deposit of 7.5% of the duty, liability or penalties as the case may be, as provided under Section 35F of the Central Excise Act 1944 and Section 129E of the Customs Act 1962. The dispute arose mainly due to different orders pronounced by two tribunals. The Delhi Bench of Tribunal in case of Balaji Structural India Private Limited versus CCE Raipur held that the deposit of 10% for preferring an appeal before the tribunal against Commissioner Appeals order is inclusive of 7.5% deposited at the time of preferring appeal before the first appellate authority. Whereas the bench of the tribunal in the case of Hindalco Industries Limited and others and ASR Multimetals Private Limited and others held that the said deposit of 10% is over and above the amount mandated to be deposited before the first appellate authority.
The bench analyzed the provisions of Section 35F of the Central Excise Act and Section 129E of the Customs Act. It also examined the CBEC circular issued in that behalf. Thereafter, it was noted that both the appellate proceedings, that is before the first appellate authority and before the tribunal, if it is to be treated as independent provision, then deposits as mandated need to be made. Accordingly, in order to prefer an appeal before the tribunal, the appellant needs to deposit 10% of the amount of duty confirmed or the penalty imposed, or as the case may be, irrespective of the amounts equivalent to 7.5% deposited by them for preferring an appeal to the first appellate authority. Thus, the decision of the division bench of the tribunal in the case of ASR Multimetals Private Limited was held to be correct, and the appellant is required to deposit separately 10% of the amount of the duty confirmed or penalty imposed for preferring of appeal before the tribunal against the order of Commissioner Appeals.
As the new IPL season begins, cricket fever is in the air again. Then why should we lag behind? Let's catch up quickly with our next case involving a company which was providing broadcasting service particularly with respect to cricket matches. The appellant was stumped when adjudicating authority disallowed Sunwed credit to the appellant on the ground that appellant is not service provider as the service was provided by their Singapore entity. Therefore, being non-service provider, they are not entitled for the Sunwed credit.
The tribunal observed that even if contention of the revenue is accepted that services were provided by MSM Singapore, it is also a fact that services were received in India. Therefore, service per se is taxable and the government is legally required to collect the service tax on such services, and it had indeed collected the same. Therefore, service tax, even though paid by MSM Singapore through their office in India, discharged the service tax. Payment of service tax cannot be disputed. In such a situation, Sunwed credit is legally admissible to the appellant. The tribunal clarified the point from another angle as well. It pointed out that the revenue, knowing the status of the appellant, granted registration to the appellant without raising any objection that the services are provided by the MSM Singapore and regularly collected the service tax. This action of the revenue stands unaltered as no action to hold that obtaining registration and payment of service tax is illegal has been taken by the department, and once registration was granted by the department and the service tax was collected, consequently Sunwed credit cannot be denied.
In our next case relating to customs, the key issue before tribunal is whether external or portable hard disk drives are classifiable under declared CTH 7020 as hard disk drive or under CTH 7030 as removable or exchangeable disk drive, and whether SSCs are eligible for concessional rate of duty of customs claimed by them for said product under exemption notification number 6 2011 of Central Excise and 12 2012 of Central Excise. The SSC involved here is Manoj Gupta. Let's switch to Anuj for more details.
The imported goods in question were declared in the bills of entry under customs tariff heading 84717020, which is for hard disk drives. The goods imported not for fitment inside the CPU and is used by connecting it to a CPU externally with a USB or other interface as a plug-in device. The fact that the goods are external disk drives is not in dispute, But what is contended by revenue is that since the external hard disk drive is admittedly a plug-in device, it is more appropriately classifiable as removable or exchangeable disk drives under Customs Tariff Heading 8471-7030, and exemption shall not be available.
The tribunal held in the favor of SSE by holding that it is not the removability or exchangeability or portability of drive per se which defines its classification, but rather that of data media suitable for that drive. The data media ought to be a removable or exchangeable disk in order to classify it as a removable or exchangeable disk drive. CTH 7020 provides that most specific description hard disk drive for imported external hard disk drive, and hence there is no room for classifying the goods elsewhere. Imported hard disk drive is eligible for a concessional rate of duty of customs claimed by importer for said product under exemption notification number 6 2011 of Central Excise and 2012 of Central Excise. Well, this brings us to the end of this episode of Legal Wrangle on indirect taxation. You may write us your comment, criticism and counsel at editor@tltube.com. Please do subscribe to the TLTube channel on YouTube. It's free and will keep you updated on our new post. Have a nice day.